Welcome to the marketplace. Coming up this afternoon, interest rates fall for the 7th consecutive week despite a marginal increase in January inflation as government records a 23% oversubscription of Treasury Bills. Also coming up this afternoon, African Development Bank warns Ghana will continue to have an exceptionally high inflation rate. We will have a conversation about that coming up. How do we tame inflation? Plus, more oil marketing companies expected to increase prices at the pumps after some took the lead over the weekend to adjust prices of petroleum products upwards. My name is Daryl. Kwawu. Thanks for being with us. Details coming up. All right, we begin our report this afternoon from the financial markets. Interest rates fell for the 7th consecutive week despite a marginal increase in January inflation. According to the auction results by the Bank of Ghana, the government raised 5.67 billion cedis from the Treasury market, about 23.64% oversubscription. Patrick Edem Agama is head of trading at Republic Securities. He joins us on Zoom. So government raises 5.67% billion cedis rather. About 23.67% oversubscription of Treasury Bills. Tell us how the auction went last Friday, Patrick.
All right, so good afternoon, Daryl. So on the money market last week, we saw that the government raised a total of 5.6 billion, accepting all the bids against a target of 4.8 billion. What we are seeing is that all the rates decrease, but if you look at the difference in the quantum of the decrease, it wasn't as much as we saw last week. We saw the 91-day decreasing by just 10.33 basis points, and then the 182-day dropping to 30.39, decreasing by only 4.35 basis points, and also the 364-day decrease to 30.9%, decreasing by 10.08 basis points. So we can actually sense that there is some level of resistance there, but the real test of it will happen in February. That's if we get the February inflation rates to see whether this trend will change.
Yeah, exactly. The question I was going to ask you, and whether or not we are going to see an impact on interest rates if inflation should continue to trend upwards in the coming month. We've seen some projections from some firms who are saying that we are potentially going to see a rise in inflation going in the coming months. How do you expect that to anticipate the market? How do you expect that to affect the markets rather?
Well, what we are seeing is that the pricing guidance is working, and if you look at all the closing rates, we've seen that it follows the pricing guidance, and it can only hold if we see inflation also trending downwards. But if inflation continues to go up, then definitely investors are going to actually have more appetite for higher rates, and that will affect the rates in general.
Well, quick stock market update. We expect prices to remain relatively same this week. What was the highlight of trading last week? What's the outlook for this week?
Well, for last week, we saw 2 gainers and 2 losers. ETI and Cowbank led the gainers, and then we saw Benzo Opam and Das Pharma losing some pesos. We expect the trend in the market to continue with financial stocks having high sell sides, while some stocks like MTN and Cowbank dominating in volumes as they did the last week and the week before. We also expect the index that has both the composite index and the financial stock index to remain in the positives to close the quarter.
All right, and also happening today, Casa Preco PLC floating 600 million Ghana cedis on the Ghana fixed income market. How significant is this?
Well, this is very significant in the sense that this is the first Ghanaian beverage company to actually float this level of, I would say, note on the market. It's a 3-year fixed rate note at a coupon of 26%. That's for the first tranche. And we expect that if interest rate trends downwards, this will make this particular note very attractive to investors, and it's expected to close at January 2027. If it also pave way for more local companies to use the market to raise funds in the future.
All right, Patrick Edamagama, appreciate your thoughts and update this afternoon on the marketplace. I want to bring in Courage Wuti, who is a research lead at Ghc Capital. Good afternoon to you, Courage. Your quick thoughts on last week's auction of Treasury Bills, the interest rates falling for the 7th consecutive week despite inflation going up marginally. We're told the government raised 5.67 billion cedis from the Treasury market, and that's about 23.64% oversubscription. What does this say about sentiments on the market?
Well, yeah, I think generally the liquidity conditions in the market is strong enough, and that's why we keep seeing the oversubscriptions at the T-bill auctions. And of course, with inflation trending down, general sentiment improving, yield decline should even be sharper than we are seeing if government were not having this strong appetite for short-term funds. For instance, in this weekend, the question, I think the maturing obligation on the market was just a little over I think 2.8 or so billion was what the maturity obligation is. Yes, we went with a target of about 4.8. Can understand that maybe tomorrow or Wednesday latest, government should be settling coupons on DDE bonds. And so probably the attention is to borrow more from that end to be able to settle that obligation. And so the test case for me is looking from from March going, by which time we would have dealt with the coupon obligation. We'll see how strong the Treasury's appetite will remain. But if the Treasury manages its appetite and how much we borrow on the T-bill market, we should see yields decline even more sharply than we are seeing it. But generally, the trends on the market, the liquidity conditions, and the fact that the options are limited for investors means that they keep going into these things. And we see for the week ahead, even there is over 6 billion in target for this week alone. But then once coupons are settled, the market should be even more liquid, and all of that will flow back into government again, right? So that seems to be the trend as it is. And we need to get to the point where appetite is managed and yields are on a sustained trend of decline.
Well, I want to bring up the subject of inflation because Ghc Capital is forecasting inflation could climb higher this month and in March to 26%. What are the factors you base for this projection?
Well, yes, largely base effects. And of course, we've seen start of the year, CD relatively stable, but still similar in depreciation we are seeing across. It's dicey, right? Because the fundamentals do not even support the kind of relative stability we see. But given the inflows from late last year, cocoa syndication loan to 600 million from the IMF to some monies from the World Bank and all of that, we were having close to $2 billion, to cushion our reserves from the start of the year, really. And the expectation was that that would have supported the CD to some stability. We are over 2% depreciation year to date. Not alarming compared to same period last year. But then those are undertones that could fuel inflation. There is also the base effect. If you remember, inflation started receding from January last year. So January, February, March, there were declines, and it got sharp as the year went along. Now, just the mathematical formula of inflation and looking at how the base could impact it tells you that you could see some marginal uptick. We've seen, it was a surprise though, January, a marginal increase when actually the expectation across the market was a marginal decline. And from the simulations I have done, the base effect could drift inflation even higher for February and March. And then we will begin to see a decline again from April. Now, the March print could go even much higher, more pronounced, and we could see inflation climb to around the upper 25 or even touch 26 at some point before it starts receding again. But when it starts receding, it will be at a sharper pace, and we should get into under 20% inflation before end of the first half of the year.
Yeah, I was reading an article from the African Development Bank essentially saying, is this Africa Macroeconomic Performance and Outlook 2024? Essentially saying that Ghana will continue to have exceptionally high interest rates, higher than Africa, the Africa average inflation. And that obviously puts pressure on the economy. I want your thoughts on that and what you would recommend to curtail that.
Well, interest rates are already very high. Nigeria is still an inflation problem. The inflation rate is tops 28, 29, approaching 29 now, but their policy rate is a lot less. And across many other economies, that is a reality. Even after the 100 basis points adjustment, we're still at 29%. And with the trajectory of inflation now, and if you like, the marginal upticks we expect in the next few months, probably the March policy rate decision will not be a window to even cut rate, because then you will create some confusion in the market. And I think the Bank of Ghana will be a bit more cautious in March to try to sustain an outlook of continuous decline before even making a decision. And in any case, you don't want to distort the market with very sharp cuts anyways. And so, yes, in my estimation, we expect maybe between 400 and 600 basis point cut in the policy rate for 2024. And that will bring rate to around 24% by end of the year. And if my expectation that inflation will be around 16.5%, then of course there will still be a huge positive real monetary policy rate gap. But that is just really an exercise of caution first under program, and to ensure that we firmly anchor this inflation to the target path. And that is why interest rate, I think, will be a bit high. On lending rates, they've been generally around 26, 27%, even when inflation was so high. I mean, the 54 and those levels, and even when policy rate was in a 30%, lending rates were under, 27% or largely around that level, really. And I don't think the cut in the policy rate, at least the 100 basis point, would do much to change that now. Policy rate would have to fall significantly close to that, or even below that, for banks to even consider lowering, if you like, interest rates in the short term, really. So we are largely aligned that interest rates, yes, declining, but will largely remain high compared to our competitor countries around. T-bill is where we have the chance to make some gains, but even that, the decline will not be as sharp as probably we are all envisaging. And you can see the trend so far. It's a marginal decline, and that's because investors have taken negative real returns for a long time, and given all the risk, the concerns, and the Treasury's appetite, you would want to be careful. And until the conditions firmly align, you won't accept so low a rate. And that is the trajectory I believe we'll see for the remainder of 2024.
I want to bring up the city, though, because it's important in the mix of things. We've seen some stability in the last few days after the Bank of Ghana injected some dollars into the system. Have we seen an end to the city's troubles yet?
Oh, so it's relative, right? We came from, at some point, over 50% depreciation in 2022. before it corrected to 30 plus thereabout. We've seen last year, it was around a 28% depreciation. In fact, that's at January, end of January last year, we were over 21%. So if you compare that to 2.6 or so is what I saw close of week last week, a percent depreciation year to date, it is not absurd. It's not unusual. Of course, the fundamentals are weak, and so those numbers are even a lot better than what the fundamentals, I believe, will suggest. But then the lack of, if you like, activity from the Bank of Ghana on the market to smoothing intraday volatility may be one of the reasons we're seeing even that 2.6 or so percent depreciation. If they will be on the market, and we can understand their reserve limitations, you wouldn't want to deplete all of your reserve trying to support a currency in a time where you have vulnerabilities and uncertainties ahead, really. And I guess that is why they are being cautious. So it's generally the macro environment. And under the circumstances, I think the CD is even faring much better than it should have. It should have been thus far this year. And with this little support here and there, smoothing the intraday volatility, we should see the relative stability continue. My expectation for end of year is around 8-9% depreciation. And I think that ultimately the things will stabilize a bit more than we are seeing now. And that rate, I still maintain that we will get to end of year around the 8-9%, unless there are additional shocks on the way that we are yet to be aware of.
All right. Thank you so much, Courage Buti, Research Lead, GCB Capital. I appreciate your insights as we begin a new week. Very helpful. Thank you so much. Now, more oil marketing companies are expected to increase prices of petroleum products at the pumps today. This is coming after some OMCs took the lead over the weekend by adjusting their prices upwards. For instance, Star Oil selling a litre of petrol at 11 cedis 97 pesos and diesel for 13 cedis 37 pesos. Petrosol also selling a litre of diesel for 13 cedis 19 pesos, whilst petrol going for 12 cedis 29 pesos. Meanwhile, officials of the National Petroleum Authority have told Joy Business that the increase can be attributed to the hikes in prices of crude oil on the international market and the city's sharp depreciation earlier this month. Turning to other news, poultry farmers are calling for an urgent government intervention to help revamp the sector. According to President of the Greater Accra Poultry Farmers Association, Kwawu, the high cost of borrowing makes it difficult for farmers to remain sustainable amidst increasing market demand. He spoke to Joy Business on the sidelines of the association's annual Thanksgiving service held in Accra.
Despite importing almost $1 billion worth of poultry products in 2023, the Greater Accra Poultry Farmers Association believes Ghana can bridge the gap with local production. In an interview with Joy Business, the president of the association, Kwame Enim-Somwa, urges government intervention, citing high borrowing costs as a major hurdle.
When we lose our livelihood and there is nothing to supplement what we have lost, it makes it so difficult for farmers to continue working because it's so capital intensive to raise birds over a period of time. And it is because most poultry farmers do layers. That is, we depend solely on the egg production to sustain our businesses. So unfortunately, along the line, when it so happens that you lose your birds and then you are not getting any support from government or from whoever, it becomes so difficult to continue to be in business because already the farmer has borrowed money from the banks with a very high interest rate, which the banks are also pursuing for. So in such circumstances, farmers become so desperate and we don't even know how to do it.
CEO of the association, Isaac Ewuza, emphasized their commitment to boosting local production and reducing reliance on import.
Last year, God was so good to the association. We had more than enough. There were groups that came even from Burkina Faso and Gambia even to get some of our feed. With the help of IFE, a German army company, we've acquired a 50 metric tons per hour machine that is going to augment the existing one that we are having. So it means if we're producing 3,000 bags a day, we are going to what? Quadruple it. And in that sense, we can go to the various regions of the country, and all those who are coming from outside Ghana who want our feed can also buy some. So this year, we are going to increase the production massively.
The Greater Accra Poultry Farmers Association annual Thanksgiving brought together members, stakeholders, and individuals and served as a platform and seeking divine guidance for a successful 2024.
The Chartered Institute of Marketing Ghana is entreating business leaders to be consistent with investments for their marketing departments. According to President of the Institute, Dr. Daniel Kasati, this will drive growth of corporate institutions. He's also urging marketing professionals to be resilient amidst the current economic downturn. He was speaking at the CIMG maiden graduation ceremony.
119 students graduated at the maiden graduation ceremony of the Chartered Institute of Marketing Ghana. Dr. Kasati urged the students to help change the narrative in industry by helping their organizations to build everything they do around the interest of the customer.
Let me seize this opportunity, ladies and gentlemen, to announce that the CIMG Regulation 2023, Legislative Instrument 2479, has been passed by the Parliament of Ghana and has therefore come into force. This feat is a boost for the marketing profession and the execution of the Institute's functions as stipulated in the CIMG Act 2020, Act 1021. By the passage of this LI, we call upon business leaders to champion the continuous professional development of their professional marketing personnel to enable them remain relevant and play the effective role of promoting and protecting the interests of customers in their organizations.
Speaking on behalf of the Minister for Education, Professor Francis Nunu reiterated the importance of professional marketing education in Ghana.
Ghana can stimulate domestic consumption, attract foreign investments, stir up economic recovery, and foster entrepreneurship, all of which are essential for economic expansion and job creation. In today's interconnected world, international and national competition is fierce. Professional marketing education empowers skilled marketers to lead businesses to compete effectively in global markets. Through understanding global market trends, consumer preferences, and effective branding, Ghanaian firms can expand their reach.
The Chartered Institute of Marketing Ghana says it will continue to collaborate with industry and all other stakeholders to ensure continuous improvement through their best practice feedback mechanism and quality assurance.
Now, Country Director of the British Council, Nido Dudodu, has called on Ghanaians who have studied overseas to invest the wealth of knowledge and experience acquired in the local economy. According to him, proper higher education opportunities is the game changer needed to propel the socio-economic development Ghana desires. Dodo spoke at the 2023-2024 Study UK Alumni Awards Ghana.
The Study UK Alumni Awards recognize outstanding achievements made by international alumni of a UK education, bringing positive change to their communities, industries, and countries. The awards celebrated winners from 3 categories. Speaking at a ceremony, Country Director of the British Council, Nido Dudodu, charged alumni to chart a path of change in their various communities and industries.
The finalists have demonstrated passion and expertise in their respective fields and are yearning to play an active role in the development of their communities. The British Council prides itself as an organization that focuses on and creates purpose. We are intent on creating open and inclusive opportunities for all, and one of the most vital areas for this effort to yield benefit for everyone is certainly education. We have organized projects that have showcased the talent and passion of young people in Ghana and across Africa.
Professor Justice Moses Kwekwa Heto, winner of the Science and Sustainability category, explains how knowledge gained over the years in biostatistics and data analytics is helping shape policy.
So what I try to do in my field is to develop a method called geospatial modeling, which trying to quantify the effect of place on under 5 child malnutrition. That is, where you live, does it have any chance of exposing you to malnutrition? or protecting you against what malnutrition. So that the communities where the chance of you becoming minority is very high, the little resource in Ghana, policymakers can send the little one over there. Because in that case, it's not possible to roll out an intervention that can cover the entire Ghana or the entire country.
On her part, Dr. Margaret Wickham Kukeba, the Dean of the School of Nursing and Midwifery at the CK Tadam University of Technology and Applied Sciences, emerged on top in the social action category, detailing how beneficial study in the UK has been.
When I got to the UK, I saw a lot of things that differed from what I had in Ghana, and from the way you are guided to learn is very, very critical. You are not just limited to recalling what you've learned. You are stimulated, if I can say, to think critically, and that really shaped my future and where I'm coming from and where I am now.
The winner of the Business and Innovation category, Dr. Dan Vincent Amon, shares how he hopes to lead the charge to revolutionize the health financing sector.
And so I finished medical school and then I started working, and then the first few experiences that I have are not so exciting. You meet clients who you have offered them the care that they need, but they just don't have the means to be able to afford the care. And I start to look at what are the other options that we can give to our clients. And so that is where I fell in love with health financing, health insurance, health economics, and then that led me into a journey into health insurance.
All right, that story ended in the marketplace, but there is more news on our website, myjoyonline.com. It has some of our big stories this afternoon. T-bills auction interest rates fall to 27.89%. Government records 23.64% oversubscription. Also, AFDB forecasts 17.1% average inflation for Ghana in 2024, warns of impact of a rise on fiscal economy. myjoyonline.com/business. My name is Daryl Kwawu. Thanks for being with us. Stay here on Joy News.